Welcome back to the program. Nigerian banks have been faced with the challenges of remaining healthy in the face of an economic recession. Now, this state has been a source of concern for the authorities, who have had to convince Nigerians that the banks are indeed healthy. Now, let's take a look at how the banks are faring based on a report released by a research firm, Exotix Partners, based in London. Tolu Alamutu from Exotix Partners joins me on the program to discuss this further. Good afternoon, Tolu, and welcome to the program.
Good afternoon. Thank you for having me.
Now, what is the significance of your reports in view of the state of Nigerian banks at this time?
Right. Our report was reinitiating coverage on the Nigerian bank Eurobonds. One reason why we focus on them is the relatively high yields that the bonds seem to offer versus other securities in frontier markets, which is our focus here at Exotix. As you mentioned, the health of the Nigerian banking system has been a concern for some time, and one of the primary concerns from an investor's perspective is asset quality. As you will know, the non-performing loan ratios at the Nigerian banks have increased quite a lot over the last 12 to 18 months, primarily because of their exposure to the oil and gas sector, but we've also seen NPLs rise in manufacturing and in other sectors too. I think that we might see non-performing loan ratios continue to rise, but I think that most of the large banks are well equipped to deal with further stress. By large banks, I'm referring to banks like First Bank, Zenith, Guarantee Trust Bank, which I think should be able to weather further challenges quite well.
Now, your report seems to be a mix of both the good and the bad. You talked about the rise in NPL, that's non-performing loans, and the fact that the yield environment is still high. But it seems that investors would rather stick with this kind of environment where they can get the highest return for their investments.
Mm-hmm. I think that in the last 2 or 3 weeks, we have seen an improvement in valuations. We've seen spreads tighten on the Nigerian bank bonds, especially on Access Bank bonds. As you may know, Access Bank is currently marketing a new bond deal, and I think that has caused some investors to take a look at the bonds that they have outstanding at the moment. So yeah, we've seen some improvement in valuations as a result of increased demand for those bonds, but I haven't made any changes in our recommendations on the bank, so we still have buy recommendations on the First Bank subordinated bonds, for instance, and also on the Access Bank 2017 bond, and we also have a buy recommendation on the GT Bank 2018 bond.
Okay, we cannot underestimate the impact of the value of the Naira on businesses generally in the country. Now, how has this affected the capital ratios of banks?
Right. So the devaluation that we saw in June had a negative impact on some aspects of the Nigerian banks. So what we saw was that as a result of the devaluation, risk-weighted assets went up quite a lot especially at the major banks. But the banks were able to offset some of that impact on their capital ratios through revaluation gains and other gains related to the foreign currency positions that the banks hold. So we did see capital ratios go down. In the report that you referred to, we've done a stress test of the bank's capital ratios to see what happens if we continue to see the Naira weaken. Now, if we look at the results of that stress test, we see that the capital ratios will potentially continue to decline if we see further weakness in the Naira. However, that stress test did not take into consideration any gains that the banks may make from, again, their long foreign currency positions. The other thing that I would flag is that if we do see capital ratios continue to decline, I think that at some point there might be some form of regulatory forbearance from the CBN. It's not really clear what form that forbearance might take, but I think the CBN would maybe reduce the minimum capital ratio requirement for the banks, or maybe say that the banks can use historical exchange rates to calculate their capital ratio. So I think that the banks would work with the regulator to make sure that there were no concerns about them meeting regulatory requirements.
Thank you so much for your perspectives. Tola Alamutu, a partner, analyst with Tolu Alamutu, analyst with Exotix Partners in London. Now let's take a look at the fixed income markets here in the country. For today's trading, Rotimi Shuleye is a fixed income dealer with Sterling Bank and joins me on the program. Rotimi, good afternoon. Welcome to the show.
Good afternoon, Chimeze.
Okay, it's Bolaji talking to you. But what is the sentiment in the market after the second trading session for the quarter?
Okay, for the fixed income market, the market has been relatively low. Yesterday, we had some pockets of buy from the fixed income market. All right, we don't just a little bit of buy in the market, but we don't see that momentum being sustained. However, the market is low right now. The sentiment is low right now for the fixed income traders expecting auction. So yields right now are relatively at 15 levels. But the expectation for the market now is that when they start selling right now to go and buy back in the auction, they are looking at maybe a 15.5% yield to buy out.
Now, the Treasury bills auction for today, we're looking at the fourth quarter auction. Tell us more about this auction.
Yeah, the Treasury auction today, the CBN offered a 91-day Treasury bills, 182 days, and a 1-year Treasury bills. We don't see the yields on the discount rate different from what they've offered in the previous auction. We are still seeing the 1-year bill to over around 18%. All right. We've not seen the CBN coming out with OMO to reduce a little bit of to more public liquidity from the system because the system is not that liquid right now. So we still see bid rates on the 1-year bills for today's auction to come out around the 18% level.
So what is the outlook for the rest of the week?
Yeah, the outlook for the week, we see some sell. We'll be seeing sell on the fixed income. Awaiting a buyback next week when there's option in the fixed income market. Okay. So for the rest of the week, we are going to see some pockets of sell, a bearish level. Then we'll see next week, we'll see them buying back from the auction. So yields will return to go.
All right, thank you so much, Rotimi Shuleye, fixed income dealer with Sterling Bank. It's on that note we've come to the end of Business Incorporated. Thank you so much for watching. I am Bolaji Akiwale. Bye for now.